Hello and welcome to Your Business Live, brought to you by Connexx. This is something that we do on Tuesdays and Thursdays to highlight our members of Connexx. And what Connexx is, it's a personal and professional business development team. We say team because together everyone achieves more. We get together on Mondays for something we call Zoom at noon for 20 minutes to just get to know people in the business community. We have our regular meetings on Monday night at 7 p.m. or Wednesday mornings at 7:15 a.m. It's an hour and 15 minutes, and you're having anywhere from 30 to, I think, out of 85 members we have in the group, it's anywhere from 30 to 65 people that'll be on each call for our meeting. And it's getting to know people behind the profession so that we find out what we have in common about your business, but more importantly about you. And that's why we started doing this Year Business Live. It's a way where instead of just doing a 30-second commercial or an elevator pitch about your business to the same group of people every single week, this is put out on our social media platform as well as others in the group. So you'll have thousands of people to see and learn about you and your business, unlike just what other groups have done traditionally. So that's what Connexx is doing to separate ourselves. Today's guest is someone that came to be part of Connexx back, I believe, in March or so. So right before this whole pandemic hit. So her experience has been really primarily through Zoom. But this is someone who has a lot of experience in other networking groups and definitely an asset to Connexx, and glad to have her aboard. So with that being said, I'd like to welcome Dawn Cameron to Your Business Live. Hello, Dawn. If you could please introduce yourself to whoever is watching right now. Tell us about yourself and what is it that you do?
Well, good afternoon, Chris. It's great to be here. It's a beautiful day, and hello to everyone out there. My name is Dawn Cameron. I am a loan consultant with a company called Homebridge Financial Services. Uh, been in the mortgage business since 1988. I am licensed in the state of New York, and I finance the American dream.
What would you say the biggest difference from when you got into the mortgage business from then to now has been?
Oh boy, there's been a lot of changes in the last 30 plus years. I've been through many ups and downs. We've had Black Friday, we've had the mortgage meltdown back in '06 and '07. And then again with this COVID happening, it's been quite a ride. Refi booms everywhere, every cyclical maybe 10 years. That's when everybody decides to refinance. Interest rates going up, going down. When I first came in the business, Chris, interest rates were around 13%. And when people complain that they're over 4% now, it kind of makes me laugh, but I do definitely understand, and I have empathy for them and try to get them down even lower if possible.
What was it that steered you in this direction to go into the mortgage business when you did?
I kind of fell into it. I was about 18 years old, and I was a legal secretary working for patent attorneys in Long Island, and it was a little boring for me. I'm not really one to sit in an office 9 to 5. It was a little mundane, so I had put some feelers out there, and I had graduated from Catherine Gibbs School many years ago, and they placed me at a mortgage company to be their receptionist. I got the job immediately. I had my real estate license at the time as well, something I just tried to do and got. And I stayed with that same manager for about 20 years. Within 6 weeks, I was the office manager. I started to do open loans, which is kind of the first process or the first step in getting a mortgage. Back then, we were licking stamps and handwriting envelopes, sending out requests for things, and the telefax machines going crazy behind us. So they were very loud, very big, very large pieces of paper with reports on them. And life was a lot different then. It was fun, but it was a lot of work. From opening loans, I became a processor for a couple of years, and then I ran a closing department for a company called Sears Mortgage. You may recognize the name; they're no longer around. Ran that for about 3 years and went through the closing process part of the industry as well. And then from there, became a loan officer assistant. saw how much fun the loan officers were having and said, that's what I want to do. So my manager, who was still the same gentleman at the time, said, I've been waiting 3 years for you to ask me that. And he kind of drop kicked me in the field. And it's been history ever since.
When you're running a loan for someone, kind of walk me through the process. If someone right now, because I don't know what you consider a buyer's market right now, and if someone was interested in buying a home, or a first time home buyer, or someone's in a starter home, would you suggest now being the time, or who should be acting now, who should be waiting, and now maybe isn't the time?
That's a really good question. Well, right now at this moment, it's considered a seller's market. The buzz out there at the moment is that there's very low inventory, meaning not a lot of houses are on the market, but there's a lot of buyers. So great if you're looking to sell a home. If you're looking to buy a home, when somebody calls me and they want to get pre-approved, usually people will do a little bit of their own research online. They'll find a company that they you know want to give a call and ask some questions for. First thing I'm going to do talking to somebody is just find out what they want. What is it that they're looking to do? I'm not an order taker. I don't want to just give a rate and tell them they're qualified or not qualified. I want to get into what it is that they're looking to do. Where do they want to be? Where do they see their children playing, or what kind of schools are they looking for? Not that I'm trying to find them the house, but I want to make sure that they get the right loan product to get into the right house that they're looking for.
Where, as far as the steps go, if my wife and I said we are looking to buy our first home, should we call a realtor first and have them show us around? Should we go off on our own with no realtor and just go to open houses? Should we call you first to get pre-approved? Like, where do you fall into that, and what should I do?
uh, Definitely the best thing to do initially is to call a lender. Get a referral from someone. Don't just pick somebody out of the yellow pages. It's an old statement, but try to get a referral or do your research, get pre-approved. If you look at homes, or if you want a real estate agent to show you homes, they're not even going to take you out typically unless you're already pre-approved, unless they know you're going to be able to get that mortgage. You're kind of wasting your time and their time unless you know what price point you want to get into. So calling a good lender right away is the best thing to do. Sometimes you just don't know what you can afford. We can find out for you if you don't have a house in mind already. We can simply look through your documentation. We look at assets, we look at credit, and we look at your income to find out where you would qualify. And then you can decide where you'd be comfortable, because those could be two different places. I'm You don't want to go to somebody who wants you to spend as much as possible. You need to be comfortable in that monthly payment of yours. Live within your means. You don't want to be house rich and cash poor. Many people are. I've done it myself. It's not a great place to be. So, but by getting pre approved first and then heading out to go look at homes is really the best way to do it.
So define for me, as simple as you can, because I'm not very intelligent. Make it, dumb it down for me. So what exactly is a pre-approval?
A pre-approval for me, and it could be different depending on who you're speaking to, but a pre-approval would mean that I'm going to take a look at your income. I'm going to ask you for your W-2s, your pay stubs, your tax returns, depending on what type of employment you have, being self-employed or working for someone else. I'm going to take a look at your bank statements, and I'm going to ask if it's okay that I run your credit, and I will only run it if I have your permission. We're going to take a look at the whole picture, and based on those numbers and where your financial picture looks like, I'm going to come up with an amount that you would qualify for. And then we're going to discuss that. And we're going to say, is that a number that you're comfortable with? No, that's way too high. I don't want to pay that much. Great. Well, what's your comfort level as far as a monthly payment? If they come to me with that, I can kind of calculate what size loan that they would qualify for based on that, their comfort level. Then they would figure out how much they'd want to put down on top of that. And now they know what kind of price range that they want to look in. But it really is kind of processing the loan ahead of time, getting a lot of the stuff out of the way. There's times when people just aren't ready yet. They may feel that they're ready, but they had no idea. property taxes were so high or closing costs are what they are. Home ownership in New York State is can be a little bit surprising, especially compared to the rest of the country. But it's doable, and it's the best investment you can make. I want to add that in there. But sometimes people's credit just isn't there yet, and I like to be able to help them and nurture them, tell them what we can do to try to bring those scores up, give them an idea, refer them to a credit cleansing company if necessary, and I just kind of stick with them as long as it takes and as long as they need me to.
How long could it take for someone to have their credit improved?
That's a really good question, too. It depends on where the damage is on the credit. So, if somebody had a foreclosure a couple of years ago, you've got a couple more years to go. If somebody just has a lot of high balances on their credit cards, but they pay it on time, it could be just a week or two before we can get the score up. So, it really depends on what the criteria is.
Well, it's good to hear that the mortgage industry has changed so much. As someone who bought my first house in 2006, the person that did the mortgage said, you could afford a house bigger than what you're going for.
Mhm.
And I was talked into a much more expensive house, and my rate was 11%.
Yep. Wow.
And it was interest only. Yeah. But yes, it's house rich, cash poor, as you said.
Yeah.
So, some questions coming in. Go ahead, put one up. What are typical down payments? That's a good question. And do you specialize in construction loans?
Okay, so typical down payments, everybody says, oh, you have to put down 20%. Putting down 20% on a home is optimal, but it's not required. Minimum down payment right now is 3% that can be put down on a home. However, if less than 20% is put down, and it's 20% of the purchase price that I'm talking about, there's something that comes into the situation called PMI, or private mortgage insurance. It's an extra fee that needs to be paid on top of your monthly payment, and it kind of guarantees the lender in case you go into foreclosure, they get guaranteed or insured on a little bit of that spread. Uh, Typically, with rates being as low as they are, I'm seeing a lot of 5 to 10% down payments. People, money's cheap. Why not? Why not borrow it from the bank and put your other cash in higher investment, higher yielding investments? The second part of that question was, do I specialize in construction loans? We do have construction loans. My specialty, however, is renovation loans. I've been specializing in that for probably 25 years. A renovation loan, most commonly known, is a 203K loan, or also a home style loan. This is where somebody purchases a house that may be inhabitable, and we can give them the money to purchase. And on top of that, we can also, in the same loan, put the funds to do the renovation or improvement and spread it over 30 years. We close on the house as is, and they can do the work after the closing. It's a
Oh, wow.
fantastic.
I've never heard of that.
Yeah, it's a fantastic loan. I can also do that in the case of a refinance. Say if somebody has already purchased their home, and an example would be the best way. Somebody bought their house a few years ago. They put down the minimum amount, and now mom and dad are moving in with them, which is a very common thing right now. Families are moving together, and they need more room, but they don't have the equity to borrow against. We can refinance that loan, add the money that they need for their addition, and we're going to base that loan on the finished value of the house, not what it's worth now. So that will basically, they're borrowing on the future equity of the home, and that would be a renovation loan, and that works out fabulously for many, many families.
Wow, that's really interesting.
Yeah.
Sean, another question. Are rates higher on a renovation loan compared to a standard loan?
Answer to that is yes. However, it's not terribly higher. On a renovation loan, interest rates may be a quarter to a 0.5% higher than the prevailing regular non-renovation rates. It all depends on your credit score. Going back to that ever important credit. Just to give you an example, if rates are at two and three quarters, On a 30-year fixed right now, it may be 3.25% for a renovation loan. Still very, very reasonable.
Yeah, and cheap,
Yeah,
cheap,
yeah.
cheap money. Sean, send it on up. Oh, that's good. What are your typical terms for renovation loan? Amortization, interest, etc.
Okay. Typical terms, a renovation loan is your regular mortgage. It's just a regular mortgage with a renovation piece kind of put on top of it. So you have your 30-year fixed, your 15-year fixed, your 20-year fixed loans. No adjustable rates on renovation loans. That they don't do. But we can also do a second home for renovation, and we can also do investment properties renovation loans as well, which is real interesting. You can make a 3-family into a 4-family into a 2-family. That happens a lot in the boroughs. I find doing that in Brooklyn and Bronx and Queens a lot.
Wow, that's I'd never even heard of that before. So someone who's in the someone who's not looking to move their family or themselves, but they're an investor in real estate, they could speak to you about doing just that as far as borrowing the money for what they need to renovate what they will be renting out
Correct.
months from now.
Correct. There's even something called a mixed use property, which again, like in Queens and Brooklyn, there's a lot. If somebody's purchasing, say, there's 3 apartments on top of a store, we can do a renovation loan on that as well. We can't fix the store because that would be a commercial aspect of it, but we can certainly renovate the apartments up there and have a mixed use property too. So there's a lot of income potential there as well for people.
Wow,
Yeah.
interesting new stuff.
Yeah.
Sean, is there one more or no? And if not, there we go. Is there a certain percentage you can loan for renovation compared to purchase price?
Uh, well, yes and no. Typically, renovations can include pretty much anything you want. We have loan limits. Uh, they're called the Fannie Mae high balance loan limits. It's kind of a long word for, we can't go over like 765,000. But the percentage, it could be $100,000 home and you're doing $600,000 worth of work. That's okay. You can do that with the FHA with the 2 or 3K loan. With Homestyle, there are some boundaries that we can't go by, but typically we can pretty much handle anything that anybody wants to do.
Great. Well, if you can pop up Dawn's information and contact to get in contact with Dawn. Right there are her contact numbers, her email. If you have any questions about if now would be the right time for you to refinance or you're looking to buy a home and want to get pre-approved and have Dawn walk you through the process, she's more than happy to do so. Contact information right there. Or if you're an investor looking for a construction loan or the other loans she covered, which aren't coming to me right now because I'm not reading them in front of me. She can answer all of them by getting in contact with her. And Don, if I can ask you before hanging up, as I said when brought you on, you came into Connexx back in March or right before this COVID thing hit. To anyone out there who is thinking about or has heard about, what has your experience been like with Connexx, and is it something that you would recommend others to check out?
I am telling everyone I know about Connexx, and I am inviting them to every meeting that you put out, Chris. It's really been a really nice surprise. I've been in the networking world for many, many years, decades for that matter, and nothing has really stuck with me like the group of Connexx. Even if it's only been for a few months, I see it being a very long lasting time with you. Sorry to tell you, I'm going to be sticking around for a while. But just everybody there, it's an instant connection with everybody. There's just one big click, which is what I like, and not several of them. And it's been a great experience. Thanks for having me.
It's great. And to correct you, you say with you, when Sean says it, when anyone, it really is a group that consists, it's the people in the group. It's a great energy. And I love everyone in the group. Everyone is just so giving and we've got a great thing going, and we're constantly looking to expand it. So if anyone is seeing this and interested in learning more how we can help out your business and help you to connect better with people, not even just in Long Island anymore, in the boroughs, in Connecticut, New Jersey, and soon to be Florida. So hitting the whole East Coast. Well, thank you, Dawn, so much. And thank you for all you do for Connexx. And again, for anyone to get in contact with Dawn, Sean, send it up one more time. Dawn's contact information right there. And thank you, Dawn. We'll see you tomorrow morning, Dawn, at our regular weekly morning meeting, 7:15 a.m. See you, Dawn. Thank you.
Thank
Sorry, Sean, cut you off. All right, so that was interesting. I've never known about construction loans that you can tie that in at the same time. So I learned something new, and I'm sure that appeals to a couple people in Connexx, because I thought of somewhere off the bat. I wonder if they're aware of it. All right, Sean, come on up.
Your volume just went out for a second.
Is my volume good right now?
It is.
Did you have a construction loan when you put up that brick wall behind you, or did you just front money for that?
Yeah, I had to go with, I went with Dawn for a construction loan for my brick wall.
Nice.
Plus, you know, it's a nice one.
Jacqueline, if you're watching, if you can do the three little pigs in the background, and I want to see the big bad wolf blowing, huffing and puffing to blow down Sean's
My
wall.
brick wall.
Yeah, that's the idea for next time. Would you learn about mortgages and construction loans and that whole process that you were not aware of?
So I met Dawn. We were in another group together, and we actually met at it's like at a real estate breakfast. And because we both touch real estate in some way, we were both there. And I remember the day we met, you know, it kind of rhymed, you know, Dawn and Sean, and we were kind of laughing about that. And then randomly, I was in another meeting in this other group, and she showed up again, and you know, Dawn and Sean. So you know, her and I, we definitely clicked. I introduced her to Connexx, and you know, we've worked together, and she's, you know, she says it as it is. She knows her field. You know, I would highly recommend her to anyone. You know, I think I didn't know about the whole renovation construction loan type of thing. You know, when we were purchasing a house, but I think for anyone who is looking for a new house or is in the market for a new house, they should definitely contact you know, their mortgage broker to, you know, see if they're approved and make sure the finances are in line before they're, you know, gonna commit. So she's great.
And I can't get over how much the loan process has changed from 2006, because whenever I hear someone's a loan officer or works in that field, back in the day, 2006, it was all, for those who can remember what it was like, anyone in mortgages will know exactly what I'm talking about. There was that period of time where people went from being stockbrokers to now being loan officers. And it was the same kind of pitch people. And I was, I don't want to say duped. I was looking to buy a home, but I'll never forget the loan officer saying, "Oh, I get you approved for a house way more than that." And I'll tell you off air how much my monthly payment was. And oh, those were fun times, fun times. All right, well, tonight, Sean, I hope you know, and you'll be on the call. Tonight we have our legal and financial meeting for Connexx, 7 p.m. till 8 p.m. If anyone is in the legal world, lawyer, process server, anything in that area, or financial, any area of insurance, financial planning, credit card processing, any of those areas, if you touch on any of those fields, you're welcome to join us. Just please go to Get Connexx. Can you throw that up, Sean? Go to getconnexx.com, and if you register, the link will be sent to you, and we will send you any information, answer any questions. And Sean, if you can throw me back up front and center, I'll sign out. One final thought. This is like Jerry Springer. Final thought. So last night was our second Monday night evening meeting from 7 p.m. until 8:15 p.m. And we had 26 people that turned out and were on that call. And for our second meeting, 26 people, I would say that's more than the average number of people that belong to networking groups in general, nationally. And someone said to me afterwards, "Are you disappointed with the turnout?" And I said, "What do you mean disappointed?" And they said, "Well, there's only 26 people that were on the call, whereas we usually have 50 to 60 routinely on our weekly call, somewhere between 50 and 60 members." And I said to them, "You're forgetting why we started the nighttime meeting. The idea was to spread out or break up the group so that it wouldn't be so concentrated and so hard to get to hear from everyone. Because what makes Connexx much different is it's the person over the profession. So we want to learn as much as we can about you. So our format is different, and it's very interactive to where it's going back and forth to members, answering questions and interacting with one another. So the idea of having or offering more meetings so we can have each group a little bit smaller is what our goal is, because ultimately with more than 80 members, it is a challenge to hear from everyone and to make everyone be the center of the attention at some point. So we're going to continue to add groups, looking to do a lunchtime group in the fall as well. So we'll have a morning, afternoon, and night meeting. So whenever it's convenient for you, we can find a time that a meeting is taking place. So again, if you have a business and you're looking to gain more business, meet more people, have a sales force of over 80 people that are helping to make introductions, please check us out. Website is scrolling right now. And for me and Sean Rosenfeld, my partner in crime in front of the brick wall, thank you for joining us and look forward to seeing you either tonight or tomorrow morning. Take care. Have a great day.